guys, it's Dave. Welcome back for another video. Hope you're doing well out there, better than I am at least. I just recently finally got over COVID, and now a week later I came down with strep throat, so that really sucks. Sorry if my voice sounds a little raspy, but I wanted to make a video today just talking about my most recent trade I made. It's an options trade on Rocket Lab. Gonna be a short video, but I just wanted to share with you what I did. I always like sharing ideas around. This one actually originally came from Jadam on the Discord. He mentioned doing something similar. I thought it sounded like a great idea, so I decided to look into it and ultimately made this trade. So let's take a look at it. So this is actually an options trade. If you're not too familiar with how these work, I'll be sure to explain it to you. But basically, when I was looking at this, it just seemed like a win-win to me. Like, no matter which way it goes, I will be happy and ultimately come out ahead. So how this works is I agreed to buy Rocket Lab for $4 a share anytime before January 23rd, 2023. 5 contracts means that's 500 shares. So if you do that times 4, you're looking at about $2,000. Obligation is to buy 500 shares for $4 per share anytime up until January 2023. Usually, if Rocket Lab was below $4 per share, it wouldn't get exercised until that final day. But I have had it happen where the contract holder actually decides to exercise well before the expiry date. So I find it odd when the option holder goes ahead and executes the contract before the end date, because if they want their money, they can just go ahead and sell the option. But it has happened to me a couple times, so you have to be aware about that if you are selling either puts or calls out there, so just keep that in mind. So I received 31 cents per share as a premium times 500, $155 American for selling this contract. Now, what is the other person on the other end of this trade trying to do? Well, they're hoping that Rocket Lab will be below about 370 at the end date, and the amount it is below that number is the amount of money they'll make. So they're effectively making a downward bet on the stock, and I'm saying I think it's going to stay sideways or even go up. And I probably won't have to buy it. But if I do have to buy it, I'm completely okay with that, because my real cost basis for these shares would be $4 per share minus the 31 cents per share I got paid to sell this option. That's an amazing price for Rocket Lab shares, in my opinion, and I would be only too happy to pay it. Now, you might say, well, Dave, that's all well and good, but $155 is really peanuts. It's small potatoes. What's the big deal? Why are you even telling us about this? And that's true, because I'm only risking $2,000 here. I could have gone bigger, and I didn't, but you have to think here. That's a 7.75% return on just 36 trading days. Now, if we annualize this return and look at how many trading days there are in a year, we're looking at 54% return on this trade, where we may not even have to end up actually spending a cent. So to me, that is an extremely good value proposition. I think if you tell anyone they can get a 50+% return on any investment in a year, they will tell you that is a great return. So why am I making this trade instead of just buying stock if I think Rocket Lab is very cheap today, as opposed to just buying the stock? Number one, I'm actually getting a better price than if I were to just buy it today by 31 cents a share. Not insignificant. That's over 7% off the top. And number two is that I've kind of already reached my target for how many Rocket Lab shares I want. Now, I am comfortable going over that, but I figured I would rather try to make some money on the short term over this cheap price as opposed to accumulating more shares. Although either method is really valuable. You might, be happy with your $155 in this trade and then not get triggered and not have to buy it at $4 per share. But then next year, Rocket Lab hits $10 and you're feeling like a fool, because if you had just bought the shares with that $2,000 instead, you'd come out far ahead. So it's definitely give and take. You've really got to think about how you want to play it and think about these options trades carefully. Doing trades like this, I look at it almost like dividends in a way, and it's a nice way to supplement your regular stocks and have some money coming into the account. But there's a big but here. You have to make sure that you know the stock extremely well you're doing this on. You have to make sure the strike price is one you're extremely comfortable paying and extremely comfortable holding the stock at. You don't want to just start doing this for any old stock out there you don't know that well just because the premiums seem good. That's how you get stuck at a massive loss. So, for example, if you were to sell a put on, company X at $10 a share, it drops to $1 a share and you're forced to buy it at $10 a share. Maybe it never comes back to 10 because it's a crappy company or something like that, and you're stuck in a huge loss. You do have that liability. So you have to be extremely careful when you're making these put trades, something I learned the hard way a few years back and am much wiser for it now today. I appreciate every one of you subscribers so much. Happy holidays and see you next time.